The Federal Reserve is out now with its report on banks. Let's go to Adam Shapiro.
Going to walk you through this real quick. The parameters for the test, 34 firms taking part. They assume in the test parameters a severe global recession over 9 quarters and unemployment rising to 10%. With that scenario in place, we would have an aggregate loss among the 34 firms of $383 billion in loan losses. Aggregate Tier 1 capital ratio would fall from 12.5% to 9.2%. Since 2009, by the way, those 34 firms have added $750 billion in capital. Here's how the Fed is viewing this. A quote from Jerome Powell, Federal Reserve Governor. He says, "This year's results show that even during a severe recession, our large banks would remain well capitalized." He goes on to say that this would allow them to lend throughout the economic cycle and support households and businesses when times are tough. Now let's look a breakdown at some of the results for those 34 firms. The firms with the highest buffer, this is the buffer against loans that they want to make sure is in place should the economy go south. Highest Tier 1 capital after a severe event, CIT Group, HSBC North America, roughly 12.9. You can see right there, Santander Holdings, 12.4, and TD Group, U.S. Holdings, 11.3. The lowest Tier 1 capital after a severe event would be among Ally Financial at 6.5, Key Corp out of Cleveland 6.8, Capital One Financial 7.0, Huntington Bank Shares 7.0, and SunTrust Bank 7.1. The big names that a lot of people rely on when they park their money. Bank of America Corporation 8.9, Citigroup 9.7, the Goldman Sachs Group 8.4, JP Morgan Chase 9.1, Morgan Stanley 9.4, Wells Fargo 8.6. Now let me put this into English. The Fed does not consider this a pass or fail test. That's next week. And they don't use the word pass or fail. They'll use the word object to the bank's capital plans. But what you can see here as an investor is how much of a buffer the bank has should there be a severe event like Lehman Brothers that we all lived through in 2008. This is the buffer ratio that the bank has against its outstanding loans. They won't give you a figure, but a lot of analysts would tell you above 4.5 is where you want to be. Back to you.
But, I mean, if you look at that stress test, it's not if the economy goes south. It's like if the planet's core implodes. I mean, that's what they're like stress testing against.
The planet's core imploded in September 2008. We lived through it.
Okay, there you go. Thank you. Appreciate it.
Well,